fantastic year for industrial, completely unexpected. We thought we were just going to make minor gains, but we made major leaps towards balancing out our market in 2013. How good was it? If I can get there. There we go. Oh, jumped in. So it was record-breaking. We had our best years were 2006 and 2007, when everything was rosy, pre-recession. Then we went into a recession and came out of it real strong. So 6.2 billion square feet of gross absorption. So what the market really needed was net absorption. If you have 6.2 billion square feet of gross absorption, fantastic, that's helpful. But if you lose 6.2 billion square feet of tenants throughout that year, you've essentially gained nothing, and the vacancy stays the same. So you don't want the fallout. And in 2013, we didn't see the fallout we'd seen over the prior 5 years, which really helped out net absorption. So we had 3.8 billion square feet of space occupied in vacant buildings, dropping vacancy. Doesn't like it. Here we go. So vacancy took a big drop here, and we needed it in a large way. Our market is viewed as balanced, anywhere from about 6% on the low side to 10% on the high side. We've been way above it and way out of balance for 5 years running, and not just a little bit over 10%, up into the 15s. That is really a tenant's market and a scary market for landlords and lenders, etc. So, and on the low side, you don't want it to go below 6% because then it's too tight. The tenants that are looking to get into the market can't find space. Landlords have too much power if it's below 6%. So right now, within 1 quarter, you can kind of see how we started the year. Okay, we're just going to kind of keep limping along. Maybe we'll finish at about 12.5. But things were really good toward the end of last year. So we stuck our necks out and put it a little bit less, but it even was better than what we thought it was going to be. So big leaps forward, and now we're in a balanced market. So a couple investment sales to talk about. By far and away, the biggest investment sale out there was the in-core purchase of the Prologis portfolio. 9.5 million square feet. I've been asked not to reveal the price per square foot, the cap rate, but it was a very high price per square foot and a very low cap rate. There were a number of institutional buyers that came in looking at this portfolio, and it did get bid up. So to justify it, you need to start pushing rents, is the net result. So after that one portfolio purchase, they weren't done. So that portfolio purchase went through beginning in the third quarter. At the end of the fourth quarter, they also bought another 2.4 million feet. So Incor is now by far and away our largest landlord in the marketplace. Our total inventory throughout the market is 74 million feet, and they have 16% of that, which is huge. So they weren't even here 7 months ago, and now they're the dominant player. Another investment sale, Panatoli sold to KTR. It was a 7.1% cap, just over 91% occupancy, and a $40 per square foot. This is a Class A, 30-foot clear, institutional quality asset. And that 7.1% cap rate is a good number to use for institutional quality assets. So when these institutions are running around looking to place money, that's the expected cap rate. A couple user sales throughout the marketplace. Arda Metals bought a 330,000 footer. User sales are typically, they're going to be vacant buildings. These are users that want to occupy a vacant building. So they smell blood in the water. The first question they always ask is, how long has this asset been vacant? And it doesn't matter if it's 3 months or 5 years, they still smell blood, they want to lowball. So better deals to be had. This is a Class A asset, ESFR, new, modern, but 35 bucks a square foot. Another Class A asset, 181,000 feet, when it's 36 bucks a square foot to a user. Okay, number of deals over 100,000 square feet. You can see 2013 was fantastic. 2011 was good as well, but that was a lot of turning going on in the market. The vacancy was very high at 15%, and so when leases were rolling, you have a 100,000 square foot user sitting in a Class B building paying 32 cents a square foot, and then they moved to a 100,000 square foot Class A building and paid 27 cents a square foot. So we just did a lot of turning in the market, nothing significant on vacancy or net absorption. But we didn't experience that in 2013. There's the list of the 15 deals that went through in 2013 that were over 100,000 square feet. 3 of those are manufacturing. Manufacturers like our area, but where we really shine is on the warehousing and distribution. 12 of those users, warehousing and distribution, we are viewed at very favorably. We're not in California, but we service the population of California. So our internet users are really the internet, or the distribution users are the internet fulfillment companies, is what's really driving our distribution. Space is over 100,000 square feet. As you can imagine, with all that activity, you can see that trending down. That's over 100,000. The more noticeable drop is in the big spaces, the ones over 250,000 square feet in the market. Now, starting the year, we're down to one space, and that's dangerously low. We're going to start losing deals because we don't have the space available in the market because we had such a good and unexpected year last year. Trends in the market, as I said, activity was fantastic in 2013. 2014, we think it's going to be the same. Rents are going to go up as that activity piles into existing spaces. Vacancy is going to drop. That's going to drive up rental rates. And in addition to that, so there's two forces kind of pushing rental rates up. You've got just the natural forces of the vacancy rate going down and the space getting thinned out. But you also have that huge portfolio sale. There's two portfolio sales with Incor that were bought at a high price, and they need to push rents up. So luckily, the market's cooperating with them. Sales, fantastic year last year. We're going to have another good year this year. There's a lot of money circling Reno, trying to place money in Reno. Construction is really where we're going to see the big change, and probably the big story of 2014 is going to be construction. Like office and office slide, it has been dead, flat dead, nothing doing for about 5 years. Now all of a sudden, with the tight vacancy, we're starting to see some real good sized buildings potentially be built. 4 of these deals up here are rock solid, committed, waiting for groundbreaking. The other 3 are highly likely. In the event that they fall out, there's other users that we think will backfill. So regardless, no matter what happens, construction is going to be very, very good. You can see the dead spot there, 2009 through 2013. When vacancy again goes up over 10%, everything, the spigot shuts off. No construction. But now we've dropped. We do have the demand still, and we're going to have great construction here. Gross absorption forecast is going to be strong. You've got all that construction. Some of that is speculative buildings. Most of that are users. So when those roofs go on, we count that, and all that's going to go into gross absorption. The negative factor for gross absorption is the fact that we don't have a lot of space left. As I said earlier, we're down to one space. So if a big user comes in and they need it yesterday, these internet fulfillment guys, they're fast-moving companies, so they don't have time to wait. They don't want to wait 10, 12 months for a build-to-suit. If we have the space, great, they'll lease from us. If not, maybe they go out of town. We don't want that to happen, but we're dangerously close to that being the case. Net absorption is going to be very good, but not as good. Some of those build-to-suits are going to be large users from town moving to new buildings. That's going to vacate some space in town. So although gross absorption is good, there is some inner market turn that's going to hold net absorption back. And vacancy forecast for the end of the year, we think we're just going to keep going down that bell curve. We're probably going to end less than 8%. Net absorption is going to be strong again, but we do have new speculative buildings coming online. That's going to add to vacancy. So all in all, we're expecting a great year. So thank you very much, and best of luck to everybody.